Hey, what's up everyone? This is Silver Slayer. Thank you for tuning into this video. There's been a lot of negativity in the markets lately, and a lot of speculation, a lot of fear, a lot of panic. So hopefully this article will bring some faith, some positivity back. A lot of people easily tend to get distracted, especially during crazy times like right now. So hopefully this article will ground you. Before we start, make sure to smash the like button. Let's see if this video can get 150 likes. Everyone go like the video right now. Thank you so much for supporting the channel. And it means to me a lot more than you could ever imagine. So anyways, gold and silver are both seen as safe haven investments to a degree, with a moderately strong correlation between them measured by coefficient of determination, or R squared, of 0.64. Despite the correlation, the gold to silver price ratio can vary significantly over time, but logically should mean reverting and generally has been. The ratio currently is at a 100-year extreme, skewed toward gold. Many have argued that despite gold's recent appreciation, it still has upside. They have a point. Silver appears to have even more upside and less downside. So here's the investment thesis. Silver is poised for a potential 40% breakout to the upside based on the uncertainty caused by the virus pandemic and its historically low price relative to gold. Both metals performed very well in the years following the global financial crisis in 2008, and while not a perfect analogy, there are enough similarities to support a bullish outlook for both metals today, especially silver. So here's the background. There's a lady who knows all that glitters is gold, and she's buying a stairway to heaven. When she gets there, she knows if the stores are all closed, with a word she can get what she came for. In the aforementioned lady walked down Fifth Avenue today, she would surely notice that stores are in fact all closed, and might wonder if she had finally found her way to heaven. If she managed to find someone to ask, they would likely tell her to put on a face mask. But more important misconception to us investors is that the belief that all glitters is gold. As our mothers taught us, many things that glitter are not good stores of value, but a corollary may also be true today. One thing that glitters like gold but in different true hue, namely silver, might be a superior investment. This article explores the medium-term upside potential for the white metal and explains why incorporating it into your portfolio could provide a strong return with limited downside. So very bullish on silver. I like the sounds of this. So gold and silver are often employed as safe haven assets and are readily available as exchange-traded funds, or ETFs, such as the SPDR Gold Trust ETF, GLD, or the iShares Gold Trust IAU. For the yellow metal, and the iShares Silver Trust SLV, and the Aberd STD Silver Shares SIVR. For the white metal, SLV is an ideal instrument based on the size and liquidity, 6 billion, and 68 times the average daily dollar value of the SIVR. It also has plentiful and highly liquid option markets, which provides the opportunity to offset the fund's expensive ratio to generate income by selling out of the money calls. Such strategy discussed here. To a degree, both metals are seen as a hedge against inflation, which is definitely true. Although in moderate inflation environments, their actual records as a hedge is questionable. iShares TIPS Bond ETF and the iShares 0 to 5 year TIPS Bond ETFs STIP are less volatile alternatives with returns explicitly tied to this CPI. The precious metals' more important features their perceived role as safe haven in uncertain financial environments. I think it's safe to say that the current environment qualifies as such a scenario. While no analogies are perfect, a look back at the lesson of the financial crisis and aftermath provides us a useful context for today. And I know this article is more towards the ETF side of things, the paper side of things, but I just want to preach physical precious metals and how beneficial they are. If you can't hold it, you don't own it. And I hope that sticks with you. I hope you are investing into the physical precious metal, because that's where the real potential is. The scale of the Federal Reserve's monetary response to the virus pandemic has led many to suggest that inflation will surely result, and gold is therefore a wise investment. Many others will note that the same was said after the financial crisis of 2008, but it never happened. Both positions have elements of truth. While broad-based inflation never did take hold, the data we will examine in this article shows that gold certainty proved to be a solid investment for the next 2 to 3 years, from 2008 to mid-2011, and that's also when silver was $50. GLD approximately doubled. A near perfect market timer could have made less than 160% from a low of $70 to a high of 184. And for its part, silver performed a little better for the first year and half of the second period, doubling over the next 2 years. Then it performed a lot better. It doubled again in just 7 months. It's fair to say silver market turned into a bubble. It would be foolhardy to make an investment assuming that silver bubble will repeat in the near future. But a bubble redux is not necessary to make silver a strong play now. The main phenomenon at play is the gold to silver ratio and has reached a 100-year high, maybe longer. This ratio, and it's definitely way longer than that. The ratio has been studied for some time, and while it can certainly get out of balance for stretches of time, logically it makes sense for the ratio to be somewhat mean reverting, and historical data shows that it has been. By the way, the gold to silver ratio has never been as high in 5,000 years, not 100 years. So turning to the data, the chart from below shows macro trends, and it shows nominal prices of gold and silver dating back to 1915. So the two most significant events over the last century for gold and silver were the formal end of the gold standard in the 1970s and the financial crisis of 2008, which is definitely true. Both times led to $50 silver. The first period of relative high inflation was an excellent time to own both gold and silver. Inflation oscillated in 4 to 14% range, and the price of silver and gold both rallied about 10 times in real terms. That said, long-term investors should recognize for the next quarter of the century, gold and silver were lousy investments. As the U.S. economy expanded and private sector innovation created progress in leaps and bounds, equities were the place to be. Thus, while the harsher critics on fiat money will surely disagree, I am not suggesting that an overweight position to gold or silver should be maintained for decades on end. Rather, I am suggesting that in periods of financial and economic uncertainty, precious metals shine. I believe we are now find ourselves in such times. In the financial crisis of 2008, gold was the first mover, but silver soon followed and eventually surpassed gold relative terms. The pattern may be repeating. Now we turn to the relative price levels. The next chart shows the gold to silver ratio over the last 105 years. To be sure, the ratio can be very significantly, but over a century it has averaged around 60, spent overwhelming majority of the time in the 30 to 90 range. On 2 prior occasions, the ratio approached 100, but it never crossed that milestone. As I write today, it stands at 113. So, 2 observations jump off the page. First, SLV went into an absolute tear in 2 years following the depths of the financial crisis. This ended a bubble which burst spectacularly in May 2011. Second, the SLV is more volatile than gold. This can be quantified via regression analysis and is illustrated in the chart below, which shows the correlations of the monthly change in the SLV and SPY relative to GLD. So you can see it's pretty close. I mean, it's near 0%. So SLV's coefficient determined in R squared is 0.64, meaning that 64% of SLV's monthly change can be explained by the movement of gold. In addition, the magnitude of the correlation given the slope of the trend line is 1.46. This is all probably gibberish to you guys, so I'm going to go to the conclusion. I know a lot of times a lot of you guys aren't in the ETF side of it, aren't in the graphs and chart and stuff. I'm barely in myself. I have to be, since I'm a YouTuber and I have to keep up with this stuff, but I'm just going to go to the conclusion. So the first conclusion is that both gold and silver should do well in the virus-related downturn and the ensuing recovery. There is a raging debate about the shape of the recovery that will follow the Great Lockdown. I'll not rehash any of that here except to say that relatively few seem to think that the volatility is behind us. The most bullish seem to be relying fairly heavily on a Fed that is not shy about throwing liquidity around and driving real rates below zero. As explained by Eric Basmajian, declining real rates are bullish for gold, and if that last downturn is any guide, gold figures to do well is not just when fear is peaking, but also 2 or 3 years in the recovery phase. And that's definitely true. That's when, financial crisis of 2008 led $50 silver in 2011. So it took, 3 years. So it is clear that silver is on sale. The ratio sits 3.5 standard deviations from the mean. If we suppose that the ratio confirms that the Gaussian distribution is extreme of a deviation, we expect to present 0.3% of that time. The percentage is 5,000 days. This data spans to work on a day and a half. To be sure, there are no guarantees here. There are no laws of physics dictating that the ratio cannot get further out of balance. And that's true. I've heard a lot of people speculate that the gold to silver ratio might even go higher. So anyways, I'm going to wrap this video up here. I'm curious to hear though, how many of you guys do invest into the ETF side of things? Should I find more of these ETF driven focused articles, or should I focus more on the physical metals? I'm curious. I know I have people on both sides of the fence. Precious metals essentially are the same markets, whether it's physical or digital or paper, but there is a difference, right? There is a difference. There's no middleman. If you can't hold it, you don't own it. And a lot of people like to be in control of their own wealth. So anyways, I'm going to wrap this video up here. I hope you enjoyed this video. If you did, make sure to smash that like button. Make sure you subscribe because I post daily videos. This was Silver Slayer. I'll see you guys soon. Peace.